This guy right here. This guy right here. He loves some alphabet. And I don't mean just his ABCs. I'm talking about the one and only Google. I want to see his face when he sees it. We got to put him on the jumbo screen. Look at this. All right. So Google Q1 FY26 revenue up 22% year over year. These guys made basically 110 billion in one quarter. What do you say to that? What do you say? Look, watch this, Jay. The beat is 2.9 billion. I heard of beats that are usually like, 1 billion, zero point 0.5, and people go ham. Of course, aftermarkets, it went ham, up 7% in the aftermarkets.
Yeah, it's a
It's
$3
at
billion beat.
370, it's a $3 billion beat on Rev. And this is in a quarter, guys. This ain't like, annual or something. This is in one quarter. Operating margin at 36, up about 2 PPs, and year over year. A 37.7 billion net gain from equity investments. Equity investment. These guys invested in SpaceX and Anthropic. And Anthropic went to a trillion that is. And then we got Google Cloud at a 63% year over year to 20 billion in just one quarter. Ridiculous, with an operating margin at 33%. And the one and only, the big homie, the greatest of all, YouTube, because we're on YouTube. We got to pay respects to the YouTube universe.
Of
It's
course.
at 11% increase at 10 billion in a quarter. Let me also say this. Netflix is at what? Netflix is at 12 billion a quarter. YouTube alone is at 10. Imagine that.
Picture that.
Imagine that. So, Jay, with this type of statistics on the ground, remember, net profit for the whole quarter is 62 billion. What do you got to say about Google? Google's dead?
I have the same thing to say about Google that I said to you a year and a half ago when we talked about it, right? You said, is this, should I invest? If I should invest, how much should I invest? And my answer when anybody asks me how much to invest in anything that I think is good is as much as you're willing to, right? As much as you're willing to. And the answer remains the same now because you're going to get the pundits on TV that are going to, on CNN, that are going to tell you, oh, well, you need to come on Wall Street. All of them going to tell you, well, this is, way beyond projections. And so, we need to cool down and we need a correction for Google and we need to figure out exactly where it's going. This must have been some kind of fluke. And they only got this because of equity investments. And this is a one time you're going to hear it. I promise you're going to hear it. There is only one purpose for this kind of talk. Please be very, very clear. There's only one purpose for this talk. It is to get you to sell. That's it. That's the only purpose
Nah.
of it.
So
That's
you
it.
saying it's a setup? It's a setup.
The whole thing is
It's
a
a
setup.
setup for the loop de
It-
loop. You've
It's
been
true.
hoodwinked,
It's true.
bamboozled,
It's the
ran
whole
them
thing.
up,
Well, no, it's
ran the
hard to
show.
really, it's hard to call it a setup because in reality, it's a signal. That's what I should put it. It's a signal because anyone who's successful in the market knows what that means. That means buy. They say sell, that means buy. So it's a signal. If anyone is set up by it, it's because they're either inexperienced, which, I'm sorry, read more, and learn from your experiences. A loss ain't a loss, it's a lesson. And the other people are just, making bad decisions that keep on losing. I don't know. I have a little bit less sympathy for you when you keep doing the same thing and getting the same results and losing. So you really shouldn't be losing with companies like this. You really shouldn't be losing on Amazon, Google, Meta. There's really no reason to sell these companies at all. Like these should be your long term, you know, wealth maintenance funds is what I would call it. Hedging against inflation, hedging against capital gains, hedging against, if you want to live off of the margins, right? If you want to leverage, these assets, do that, but don't sell it. That's not why you hold these companies. The only thing you ever do with companies like this is buy more. You make a decision: am I going to stay or am I going to grab more of those positions? Because let's look at the numbers. Like this is not going anywhere, barring some significant, world action. In which case, I would say you really need to buy. But it's just what it is, man. I'm not surprised by the numbers. Um, I'm very excited by the numbers. I'm happy for Google. This is arguably the first company I ever invested in. One of the first two or
Oh,
three.
really?
Oh yeah, for sure. Way back in 2000 something, 2008, nine. Yeah,
Woo!
yeah,
2008, 2009. I gotta look
yeah,
that up. That's
yeah.
how long, and you held the whole
You know
time.
what? And I can tell you, I can remember. I'll tell you exactly when it was. It was when they first did their huge split. They had hit about $1,000 a share, and they did a split. And this is when they split up their shares into Class A, Class B, Class C, and Alphabet. It was right before that happened.
And this was 2008. Oh my
It could have been
goodness.
like it was in the 9, 10 range, something like that.
We can go to tens.
Just
That is
Google real
still
quick. Just Google real quick when they did the split. When they did the split
no,
and
no, no. We'll take
yeah,
it from 2010, just the latest and the highest point.
yeah,
What I'm just
yeah.
trying to annotate here is that's 2,387% gain since that time frame. It don't matter if you had $1 in that bad boy.
And it
That
wasn't
bad
much
boy
then
is
because I was
2,000.
broke, but it wasn't much then
Hey,
because I
but
didn't have no money. But the
the
point,
multiple is the
it's
multiple.
exactly, it's besides the point. All right, besides the point.
And DCA, I mean, come on, like that's what it's all about right there. Just give me a second real quick. Yeah, so man, Google is on a tear, man. 2008, man, that's a good time. There's
Yeah,
not time in the market, but we be focused on time in the market. I want to pull back up that Google.
I wasn't
Go
even
ahead.
really at the time. I wasn't even really aware of different market conditions and like the general trend of tech. Obviously, I never imagined like this kind of growth in 2008, 2009, but in that time, I was basically making decisions based off of companies that I liked. If I'm very honest with you, I was a huge Google fanboy back then.
Yeah,
Like
it makes
I
sense.
loved what they were doing with the Android environment. I loved just the software that they were producing for free, especially when you're a young broke kid and you need that. And, I had a particular hatred towards Apple at this particular time. Not anymore. At that time, I had a particular hatred towards them. And so I was like, if I'm going to invest in a company, I'm going to invest in my favorite company, and that was Google at the time. So. That was why. But these days, obviously my decision making is a lot different. It's been that way for a number of years now. But I'm glad that I did start investing in them
Yeah.
then. Obviously, 22,400% is crazy.
Kind of was like maybe you didn't know, but that's the Peter Lynch way, right? Know what you
Yeah,
invest in what you know, and that's what you did back then. And though it was more of what you knew and the services and products, but that's the core of what the business is. It's not ticker
it's not.
symbols. It's not the stock. It is the
It's,
freaking business.
and if I'm real honest about it, it's not very different
Go
from what I
ahead.
do now. I still only invest in what I know. And generally speaking, what I like. There's some exceptions to that. I do invest in some things that I don't like, but I only invest in what I know. And the only additional calculation I have, on top of that now is I have to have an understanding of obviously what their production is, right? What is it that they produce? What is the value of it? Where do I think it's going? I don't really look at much more than that. It's all highly conceptual. I don't spend a lot of time looking at charts and numbers. Not a ton, some,
Yeah.
a little bit, 10 or 15% of my time that I'm making an investment decision, I'll spend looking at charts and numbers. But when I'm looking at tech companies, I never even peek at your PE ratio. I don't particularly care about your capex. I don't particularly care about any of these traditional markers. Those are not how I make decisions. And some would say I'm reckless for that and I'm a fool, but results speak for themselves. So
Yeah, that's what I say. I was arguing with Grok the other day. I'm like,
yeah,
results speaks for itself because it was trying to argue about diversification with me, and I'm like,
the
understand.
worsification.
Yeah, diversification, right? And I threw those bombs in there and then went over its head. But net, it was just like I was like, bro, you're a bot. You're just repeating, you know what I'm saying, the narrative.
The world we live
You,
in now, you're talking like, bro, you're a bot.
yeah, you're not using first principle thinking here. I was like, these are the key components towards what diversification means. And then so I took those key components and found that that is in Amazon, but it was like, no, it's under one corporate structure. And I'm like, okay, even if I give you that, then out of 7 or 1 out of 10, it's about at least a 7 out of 10 still diversified. You're just saying no because it's not in the many different stocks. And I don't think that's a good measure. The most important thing is geographical location, also followed by the sector, and then also followed by other metrics. So I was just like, what he was naming was not a metrics for a key component of a diversification. I was like, even these companies have private equity ownership, right? And so they're a conglomerate. And then
So
he was just mad and hating.
let me get this right. Grok's logic was that because all of Amazon's ventures and projects are under one corporate structure, that therefore it's not diversifying.
Yes,
That has to be the stupidest thing I've heard AI say in a long time. And I heard
it
AI
was dead
say
ass.
that there were no eyes in Mississippi a few weeks ago. So I mean, like it's
Yeah,
I've heard some
that's
pretty
wild.
that's on that no, that's on that level to me though. Like those are pretty close.
It was saying that, man. And it was like, this is what it do. This is when I was like, yo, Grok, you lost. Because it said true. It put the word true in front of diversification. So it said, all right, but it ain't true diversification, portfolio diversity. I was like, bro, you can't just say true before a word
That's
and
an
then just
L.
say like,
That's an
yeah,
L.
exactly. So shout outs to Grok for trying to swing with the champions. And then I was like, oh, this is what I did. I was like, yo, but what's your return in the market, bro? I was like, unless you're returning the market.
Stupid,
And then
bro.
Grok was like, it was like, you can take all the personal stories you want. It used the big word I didn't know what it mean, Iteraskaski or something like that. And it was like, you can't take that personalized experience and project that onto the. I was like, all right, yeah. Peter Lynch, Warren Buffett, you know them guys. It was like, shut up. It malfunctioned. It turned off. Like, so shout outs to Google, man. Shout outs to Grok. I should have used Gemini. So anyway, shout outs to, but let me end this because we'll move to the next one. I do want to say this about Google. See, unlike Jay, I didn't know nothing about Google. But what I did do is I love Google. Like if it wasn't for Google, I wouldn't be the investor I am today. And that means that I use Google for education, maybe edumatation also, like education and entertainment. But that's what I loved so much about it. I was like, bro, you can learn any skill in the world just via the University of YouTube. And so between YouTube and Google search, it made me the multimillionaire I am today. And so with that, that was the building blocks towards me saying it's a great investment. It's a great hold for me in my portfolio and forever will be until that change, right? Of course, we still got to watch it. Google's worst enemy is Google. But
Yeah,
I just wanted to
100%.
add that in there. Yeah, you agreed with that.
No,
Look,
for
hold on.
sure.
Speak to that a little bit before we move into the next one. What do we mean by that when we say Google's worst enemy is Google?
Well, it does frankly become a bit of a socio-political discussion, really, at that point. Let me put it, it's a socio-cultural discussion, right? It's not really so political, although there are political undertones. But, Google has a certain philosophy that they operate by, and
Hmm.
it's a double-edged sword because it's what makes them great, right? And it's also the same thing that holds them back, right? It's the same thing that pierces them on the other side. And what we mean by that is they have an incredibly laissez-faire, pseudo liberal, neoliberal, not classical liberal, neoliberal, culture with their work culture, with their, productivity culture, with their, uh, it seems like with just about everything except for their financials. Like, honestly, it really does. Like, because when it comes to their financials, they always seem to be for these huge, like, if you look at their huge money makers, for example, Google is never going to throw a huge wrench into the well-oiled machine that is YouTube ad when it's bringing in 10 billion in revenue in a quarter, right? They're not going to throw a huge wrench. And can you pull that chart back up? The Google chart. Yeah, so not going to throw a huge wrench in YouTube that's bringing in 10 billion, in revenue. Like we've been using Google since the 90s, have we not? How much has it changed? Think about it for a second. How much has Google, the search engine, changed
Yeah,
since the
not
90s?
much.
Really hasn't, frankly.
Since
Not
the
really much.
LLM
Yeah, exactly. It hasn't. I mean, nowadays,
overview.
all they've done is throw the biggest change I can think of probably in the last 30 years is the fact that now AI just amalgamates data for you and gives you like a well-defined answer at the top. Very
Yeah,
subtle
overview.
change. It's one little text box, right? And why? Why do they not change it? Well, because it brings them $60 billion in revenue in a single quarter. You understand what I'm saying? So it's, I mean, in fiscal to 26 single quarter. So it's got to be like understood that with respect to these money makers that Google knows are what are keeping the lights on, keeping the investors happy, keeping the people happy. They do well with that. Google's problem, however, is when they spin up new projects, new software projects, new ventures that they purchase, companies that they buy, even Android, which frankly is still a project for Google. Let's be very clear. Android is not a well-oiled machine, even though it's been existing forever. The Google operating system, the Pixel phones, that's a small project for them. And do you want to know why? I want you to take a look at this chart. Take a look at this chart, right, and tell me where you see mobile phone hardware sales.
Just right here, Google Play. No.
Yeah, you could say that the applications that are running on many of the Android devices are in that, but Google
Yeah.
Play is way bigger than just an Android device. Mobile
Yeah,
phones,
exactly.
they have
Exactly.
Nest
Yeah.
in there, and they're including YouTube Premium in there, which is definitely not
Yeah.
limited. So I mean, and that number even is only 12 billion. That's 1/5 of what the search engine is, right? But
Facts.
it falls into a category that is in the other of this chart, right?
Mm-hmm.
It doesn't bring them any significant amount of revenue. And so that's a product that could have rivaled the iPhone when it dropped, right? Easily could have rivaled it in terms of revenue, in terms of allure, in terms of culture to claim. In fact, they had already built the phone before Apple had released the iPhone. Apple beat them to market with publishing it. And you had the Google executives and hardware and software engineers sitting back there like, oh man, we can't believe they just did that. Steve Jobs went on stage and revealed it in 2007. It was like we were about to do that, right? And then they came, much later. And I thought for about a year and a half, for about 2 years, right, until the iPhone 4 came out, that they actually had a better phone. I thought the Android phones that existed when the original iPhone came out, sometimes called the 2G in 2007, and then the 3G came out in '08, and the 3GS came out in '09. I thought the Androids were better than all of those. And I think it's pretty objectively speaking, they were. In that time, we were still dealing with the memory chips, with the storage chips, and they have way more features, and nobody was really feeling a touch screen keyboard only at the time. Because my iPhone has never had a physical keyboard, never. It's always been touch screen only. And if you remember early on, with a lesser pixel count and less uh, verbosity, right, of the data points for the touchscreen because the touchscreens just weren't as good technologically. It used to be kind of a pain to text on an iPhone, right? It was one of the reasons why people actually would criticize them early on. You couldn't text on an iPhone because the keys were too tight and the screens weren't that big, and you would hit the wrong buttons, and everybody just wanted like a physical keyboard, like something tactile that you could press. And then the iPhone 4 came out and the screen quality got way better, the Retina screens. And Google missed all of that because they kept treating Android like it was an open source project that was just for funsies, right? And they do that with their culture and they do that with lots of different projects. And
Yeah, makes sense.
that's what holds them back from frankly probably having double what they did, in my opinion. And so if they allow that culture, I think, to permeate some of these, tried and true revenue vectors by
Yeah.
allowing people to sleep in pods at work and, come in on days that they want and infinite vacations and, weird stuff like that. They have to
Yeah.
understand that they're not going to be able to maintain with the growth of the industry. So I don't really think that's a huge concern. And it doesn't make any
Yeah.
change in how I invest. When I think about Google personally, it's just something that I look out for and that I watch. But as
Yeah,
long as
makes
their
sense.
numbers are doing fine, and I know it's not just because people are selling like out of fear, then it doesn't change how I approach it. So that's what I mean by
Yeah.
that.
Yeah, makes sense because I was reading the book How Google Works. There's many different types of books that speak about the company, but I was reading this one, and it was saying that all these moonshots, that's what they call them internally in the company, moonshots. People were worried about that more and trying to get in those departments than the main bread and butter, which was search. And so they had to like try to convince the employees, like, hey, relax, okay? Because of course people want to try something new, these new innovations and be creative. But they're like, hey man, come on, we can't lose track on what is the fundamentals here for our business. And so sometimes it does have to fight its own culture and trying to get people just honed back into the bread maker. One of the things I wanted to go over, just show it on the screen so everybody can see before we head on to the next company. So Alphabet, as you can see right here, in 2020, they weren't making much money. They were losing money, 1.2 and then at 3.8 billion. And as you see, as they go in, and that's a quarter, and as they move in all the way into 2022, into 2023, this is when they started actually making profit. And so they started being positive cash flow, and they are here today in 2025 making a lot of waves and impact. So CapEx, if Google says they're going to spend it, whoever's saying it has to have a better track record of spending money better than Google and making more revenue. If you don't, then I'm going to listen to Google. And then now when we go to what is it called? Gen AI website traffic in the last 12 months of March 2026. As you can see, they're carving out a little bit more space, but ChatGPT is dominant in this aspect, all right? It's not all around AI and they're the leaders in the galaxy, but when it comes to usable application, they're doing it. Sorry, Grok. I mean, come on, you hurting, bro. So net, shout
Well,
outs to Elon Musk, but golly.
well, I mean, there's
they
there's really only two of these models, right? If you look at this, and I've never seen this chart, but having seen it, I totally believe it because it's been my experience. And like I said, I'm using AI probably more than 99.9% of the population. Is
Yeah.
only if you on that chart, if you bring it back up, only two of those Gen AI models are actually growing every single month over a month. Every single one, like no losses, just literally getting bigger every month. That is Gemini and Anthropic's Claude. That's it. Look at the rest of them. They're either stagnant or they get smaller, bigger, or in the case of GPT, just continually getting smaller.
Yeah.
And it's not
Yeah,
because
yeah, exactly.
it's not because there's anything wrong with GPT. Like GPT-5 is a
No,
phenomenal,
I don't think so.
especially when you're doing like wide, like deep research. But
But normies
GPT
are normies. You got to remember normies.
GPT benefited from being first to market with its Gen AI,
That's
right? Like
it. And that's
that's what it
because
is.
Google let them.
Yeah, they did because Google could have won AI so long ago, but that's what we're talking about, right? That's what we were just talking about with their culture and some of their, I think the early days they treated it like a moonshot project,
Yep.
right? And one
Yep.
of the proofs of those is they invented TensorFlow, right? Which would have frankly just been the predominant machine learning model. I mean, machine learning, language for building machine learning models forever, right? Like they had a developer program around it, like it was getting deep in the industry, and then all of a sudden it was just like poof, like Google abandoned it, right? And like Google has had a history of just doing this to their projects over time, just abandoning them. And Gemini is proof that no, we actually do have a phenomenal model. I don't know how much you guys use Gemini, but I use it all the time. It's really, really good, especially, the
No,
3.1
I
Pro.
use it.
And it just gets better. Like I find myself like I love Claude as well, don't get me wrong. But when I use Claude, I'm usually using it in a
It's
more
different.
agentic fashion than a generative fashion. I don't use
Yeah.
Claude in a generative AI fashion, but Claude, I'll watch like the logic of how it's thinking about some of the prompts that I give it, and it's looping. It's like looping, like going in circles, talking about the same. Wait, but the user wanted me to do this. Wait, but the user wanted me to do that. And it spends 10, 15 seconds on some of the more complex prompts that I give it, just trying to figure out what I really said. Whereas Gemini, watch this thought process, it immediately contextualizes it. It immediately understands it. It doesn't assume that I mean or don't mean anything. It'll ask me the question and then give me the answer for both possibilities and then give me a more refined answer when I respond back to it. So Gemini is better at actually acting like a human in these conversations.
Yeah.
And I think for Gemini is what I use on a day-to-day basis. I use GPT for some things. I especially use GPT 4o Mini because it's cheap and easy and they have a free tier. I use it for some of my projects where I use it in agentic fashion for grounding searches. But Gemini is what I use when I use Gen AI.
Yeah. No, I love them both. Definitely more so Google because I'm just biased.